think this is not recording. Yeah, pretty sure it is. I just realistically the only reason I'm making this video is for myself, just so that I can keep track on just my trading. Kind of see just the journey that I'm gonna go through. I've been trading for a while now, but I just thought, hey, in my free time, I'm just going to talk about my trade for the day. I've had plenty of trades, like this long, yesterday, only to there. That was Tuesday. What happened Monday, oh yeah, called a short from there to there. I've got this all in my Notion, in my journal. Then Friday was, I don't remember if I had a trade on Friday or not. Oh yeah, I did actually. It was break even, long in until all-time highs. Pretty sure it was a 3-minute for value gap here. Invert that, stop was there, break even point was there, pretty sure. Got broke even, went for a walk, and then all of that happened. But yeah, let me get into today's trade basically. So today's trade, I only trade New York. I am in England, so I'm in England, so it's 2:30 for me. New York open, 9:30 open, and today, this is daily open by the way. Today, as you can see, we had such nice low resistance liquidity today, like super nice low resistance liquidity. This is like A plus liquidity, not A plus setup, but A plus liquidity for me. And on top of that, we had this H4 for value gap, which we didn't tap into, making that a nice level. Did I think that was gonna go there? No, not today, not really. But the most probable draw on liquidity is down for me. So I know I open, I really wanted it to come up first, to take this high, come up and do some sort of invert for value gap, then sure. But whether I'm not doing that, so we just sat there patiently until it gave us more data to work with. So in the higher time frame as well, let's go 15-minute. We had this bearish for value gap up here and this one up here. I liked the probability on this one holding more than this one. Why? Because we had an SMT with ES here, because as you can see, ES goes into the 15-minute fair value gap, while the NAS crack doesn't a bit. So we have a little SMT then with that. So that's all good in the hood. So I'm here playing with my probabilities, thinking, okay, we got a bearish SMT, well, we have 15-minute fair value gap, and on top of that, we're taking buy side liquidity. And the other thing as well is we've got all these low resistance liquidity. Another thing to point out as well, which I like seeing, is that London, if we were to take this low and then we were shooting up, that means London was quite strong. But because all we're doing here is just engineering even more liquidity, because we don't take the liquidity, we engineer liquidity. For me, if I'd swing low and a swing high is made outside of a kill zone, that's not very strong, in my opinion. This is quite strong. This, not strong. And then we see London, and then we take that, and then we go. Yeah, I do get ahead of myself talking about trading, because I just fucking love it. But I'm going to the stage now where I can trade very patiently and very disciplined as well, because I know I need to just wait for it to look very good, and that is it, and just let the compound the prices compound. Yum, 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 yum. Another thing as well, which I like seeing, is how important the high is. For example, this high, I don't think is very a strong high. The only reason is because we consolidate it. Yeah, but this is for like tomorrow's trading, for Thursday's trading. But let me talk about the trade now. So when this was coming up here after 9:30 open, I was looking at some longs here, but I was thinking, nah, you know what? Because ultimately this was going to be the high. It was just very probable that getting taken, but I didn't take anything because my bias was bearish. So I didn't get in this trade because I made money up here. So I was thinking, well, I put more risk on the table, but the same plan just went, yeah, very, very, very nice plan, because that was my what's the word that we use? Me and my brother, we used what's the best? Give me a second. Have a glass of water. Think about it. What's the best case scenario you want to see in trading? And that best case scenario is really where you're really waiting for that to happen, when you're super, super patient. And that would be my best case scenario. But it was getting towards like later day, I had some stuff to do, so that's why nah, I am lying on that. I didn't do that. We were up here. I just didn't take this one because I made money up here. That's the only reason there. So up here, I'm not gonna lie, this was probably the sketchiest trade or I had in the last 2 months, probably. Only because of how price was acting here, was just consolidating everything. But basically, all it was, a high time frame. We're coming out to the 15-minute fair value gap, SMT, blah blah blah. 1 minute, I am pretty sure we had an SMT here as well. With yes. So let me do this. Yes. Change that to 1 minute. Change that to the 1 minute. I'll give it a that. Yeah. So we're getting SMTs at the highs here, while we have a bigger time frame SMT, while hitting a premium or just a bearish fair value gap, but way above as well, taking a lot of liquidity as well. Another thing as well, which I really liked, what gave me more indication, was all you're doing here is, if we were to take, all you're doing here is really pumping up without taking any liquidity. Just something to notice. But yeah, so we got SMT at the highs as well, and we had this one bearish fair value gap here that was getting respected until we come down, inverter. This is all in the play that we're going to be going lower. This is on my eval, by the way. I've got 2 past accounts, but I'm just trading evals for October, and then I'm going to start trading the funded accounts. But that's the point. We respect this, which I like seeing, because that means they're utilizing, not they, price is utilizing this fair value gap. The only reason I was a bit sketched out about this was because we do have all these equal highs, but it was just clean in a way, but not clean in a way. I don't know how to explain it. But obviously, if I got tapped out, then I would have said, hey, it wasn't clean. But this is a trade that I would take 9 out of 10 times because of the whole narrative behind it, you know. So that's why the probabilities come into place for trading, and that's just the way you gotta think, you know. So with this one, I know this was sketchy, so I had to be not sketchy with my TP, but I had to be very, very anal about it. I wanted to take it here. The reason why I wanted to take it here was because, first of all, It was a 5-minute untapped and a 50-minute untapped fair value gap. And the other thing as well is just we're bound to get retracement listed at 50%. So that's my plan. But do I need it to go all the way there? No, because I'll make a decent amount of money with that, just that little move there. And that's all you need, is a little piece of the pie. And if you get a little piece of the pie every day in trading, then that's how you stay profitable, and that's how you beat this game. So yeah, when this candle here, these are kind of my break-even points in a way. But the thing you got to notice as well is like, what sort of liquidity have we taken, and are we still making relative equal lows? This is very, very, very quick, you know. But here we just come up, we stop, we then create equal lows. We stop there, we open, we wick down. Pretty sure we wick down, we create equal lows, and then we come up. Are you sure there? Right there, my stop loss pretty sure was up there. And then I'm going pretty ham with these evals, only because they are the evals. I'm trying to pass them like one a week, which ain't bad whatsoever. So I shorted here, and then I saw that I was up decent amount of money. I was up like 900, a grand when it hit him, and then when that hit, I was thinking, you know what, very sketchy. I'm up in money. Wait, let me backtrack quickly. So this break-even point for me, I can just go back real quick. Is once I go in, I like to go very, very lower time frames and try a pinpoint a break-even. So I either use that one or that one, but I like being very, very with my break-even points, because to be honest, I'd rather get a break-even point than a win, because all I do there is just protect my capital, and that's the main goal in trading. I try and protect my capital, and then if it gets to a win, then so be it, I win for the day. If not, obviously then I could rally up, I lose money, and hey, but that's the probability game of trading. But when you've done this, I think, long enough, you do get. I'm not saying I've cracked trading. Yeah, that's the worst way you could. That's the worst thing you could ever say in trading, personally, because the way you think about trading is definitely how you act in trading. And if you start thinking like you've cracked it, then you've got this false sense of reality, like a false sense of like super confidence, when really there is no confidence in trading. It's all probability. But there should be confidence in the sense of like you've done enough screen time, you know what you're looking for, etc, etc, etc. Sorry I'm rambling on, but I'm not even gonna say sorry, I'm just gonna ramble on anyway. So I then pick up my break-even points, and here as well, which is very, now that I see it, is we come up into the order block, exactly where TP, but I didn't see that. I just saw how much money I was in, and money close to trade. So when this got in here, when this came down to the least level, I know we took it, but I don't really care. That's my level, my break-even level. Going break-even, boom, take money, ciao. And after that, I just went for a walk and humbled myself, because the worst thing you can do after you win is just, I mean, that, don't get me wrong, you do want to celebrate, yeah, like you've made money for the day. You made money for the day, you gotta be extremely blessed that you're able to trade and everything. I'm just extremely grateful that this is, I mean, look at this trading. You know, this ain't no regular job. I ain't got no job, I ain't got no bills. So yeah, that was a dub. My track record right now, I'm pretty sure for the last 2 weeks, when I say my track record, I mean, I passed that account yesterday, and this is literally a fresh account today, so I have like 50,800 and, what should I say, 880 or 860 or 820, I don't remember. 7 lines, but yeah, that was a trade for today. And then the best case scenario was what's this? Like we come up to the 15-minute fair value gap with the SMT, we then boom, 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 come down. And this is like creme de la creme. I wish I did take it, but my dad took it, funny enough. He took, I think, a fair value gap down here, going for the liquidity, and took it all the way to there. And then longed, and then longed all the way up. Banging day for him. Part of account as well. Big up. So, best case scenario was that this whole run up gets absolutely invalidated. Why? Because then the fair value gaps, if price is bullish, all of this should respect price to then go up. If not, then guess what? We then come down, invalidate it. Here, we then wick right into it and go down. And what do we do in this move down? We literally stop bang on. Where you can see yourself, London lows. And then all we do as well is take all that low resistance liquidity. And I think it's what you gotta think as well is I know you might have thought it wants to go to all-time highs, but what a bigger play is thinking. They think very long term, so they'd rather bring price all the way down, take even more people down, because a lot of people probably bought down here. Yeah, thinking. I mean, there's nothing wrong with that. Don't get me wrong, but it's just the way that I think is. So many people, for example, yeah, they're gonna get a 4-hour chart. And so it's massive dump here. Not saying this is a massive dump, but that is quite a massive dump from one day. It is a massive dump, and then obviously we all straight back up. For me, because we had bang on equal highs, I think this is too easy. So I do think we're gonna come back down again, and possibly take liquidity, and then there'll be another time to buy, because we either go to weekly or monthly even. We have got, I mean, it could most likely come up to like these levels here, or these order blocks here. Yeah, but I'm getting way too ahead of myself because I enjoy it. So that was most probable scenario. So you probably would have gone short there. My stop loss would have been up there, and TP there, and leave a runner. TP there, and leave a runner all the way. Me personally, I probably would have gone to there, not all the way down to there, because that's the most likely place, because you've got daily open and you've got banging low resistance liquidity right there as well, and the Asia way below it. So yeah, that's like 9 out of 10 times that's where it's probably gonna go. Did I know I was gonna go there? No, but with that A+ liquidity, yeah, this is banging. Really good, really nice. So yeah, that was today's trading. Let me just take a screenshot of that, and you know what, I want to show what is that? Oh, that's that. You can even take a screenshot while recording. I don't know. You know what I'm gonna do? I'm gonna do this. Alright. Tuesday's trading. Can I start new, please? Thank you. Today's Wednesday, isn't it? Yeah, well, it's Thursday now. Okay, so my thesis behind this, yeah. Again, let me bring it back a little bit more. Yeah, I did take this trade yesterday. Obviously, you might think, or if you are watching this, you might think you're lying, but it's it's up to you if you believe me or not, but I did take this. So we have we got this gap here, which is a good draw it's a good draw to the market, but I don't personally use that because there has been times where there's been so many times where it just comes like this and then obviously goes way higher, and then ultimately it does go there. But yeah, I just wanted to really see what New York does. I've got like a plan, but then the main plan is when New York opens, because that's when all the volatility comes in and everything. So what was I seeing here? Obviously, I was thinking this was going to be really bearish because Asia was super bearish, and when Asia is that bearish, it normally sets up a range. That does do quite a lot, but then ultimately it wants to come and take it because Asia just sets up all the liquidity to get taken. So if we were to go like a lot lower, like way lower, this is going to get like boom, like ran through. But on the other hand, even though we were super bearish, we did have this 4-hour Fair Value gap there, yeah, which is untapped. But one thing I was looking out for was that we did invert this Fair Value gap. Yeah, so I had these two zones here, which I know we have tapped into it on the 4-hour, like here, but we could definitely retrace into that again and then go. And if it does do that, then most likely it's gonna come and wick into here. But we'll see. Another thing as well. And then I go to the 1-hour. What's that? This 1-hour range here, this whole range here, we still have not hit the 50, which is a very nice draw on liquidity. So we still have not hit the 50, so we could definitely see price coming up. And this is all before New York opens. Here. And the liquidity we've got is Asia, and then we've got London there, and everything. And I then add like these ones here as well on European. So then I play about with the liquidities, because liquidity is very important. Another thing as well that you might see, which is something you want to be seeing, is like where are consolidations happening, like for highs and like low resistance liquidity. Right here you can see there's very nice low resistance liquidity. We go here, we take the high, but then we start this. We come here, we do take the high, but then look how relative that is. We then come here, we do have all this move, but look how then relative that is to that one. We then come down, we then create equal highs, and then I know we have all this down movement, but then look how relative that is to here, and then we do take it so slightly, but it's a pain in trading, so it's not going to be bang on. So we had all the nice low resistance liquidity then going up as well. I'll leave that on there. Show. So then I really then wanted to see what New York was going to do. We then shoot straight down. We then basically closed the, we end up doing that, yeah. And this was a bit tricky because I really wanted to see, better than mine as well. Look how we consolidate. What do? Manipulate down. Yeah. And if we were to invert the manipulation, where would you see it want to go at least? At least go to here. Equal highs. There. Well, there, and ultimately probably the 50%. It's just how does price react? Like, what story is it telling you? Not everything is so fixed. You really gotta think like, what is the price telling you? Okay, so here I was trying to look for an SMT at least, if there was an SMT. Yeah, let me delete all that crap on there. Oh, was it one of the 5 minute? Because the other thing as well, trading is very cheeky. Well, the price is very cheeky. Okay, let me see if I can figure this out. I'm not sure if it was this or not, but for me, yeah, price is cheeky. You can see that when we open, if these prices, yeah, Nasdaq and S&P are very the correlated markets, they should move exactly the same. Yes. So from Friday, 2150, 2150, that's the low, that's the hard gap, yeah, that's the low, that's hard the gap. We don't come into that here, and we do come into that here. For me, creating not like the normal SMT you would say, which is obviously like that one there to that one there, that one there to that one there. Obviously there's no one there, but I'm just giving an example. It's not that sort of SMT, it's a bit different SMT. So that gave me a little bit of more confidence. But the bigger confidence was the low resistance liquidity as well. I mean, this is the I mean, if this wanted to go down, it could go down. But then here I asked myself, in the 1 minute, yeah, was, okay, I know we do invert these fair value gaps and a lot of people went long there, but that's not the most ideal scenario for me. The most ideal scenario was that, because here all you're doing is taking liquidity and going into fair value gaps. And here, once you go in here, you're going into a 5 minute fair value gap. So then that could go down. Do I know it's going to go all the way up? No, I don't. So that's why you need to be patient and play with probabilities. So this here was my ideal scenario. So then when we start coming up, just patiently waiting for price to do its thing. We start coming up. Then here, did we close inside of it? No, so I'm not longing. We didn't come here, did we close inside of it? No, so then I'm just waiting. Here we do close above it. So here then I've got my limit here. I had my limit there, my stop loss was there. My reason for my stop loss being there was it. Then if we go down to the 15-second is pretty sure it was, yeah, here. My thesis was that if we then start really then dumping down, taking all these kind of like, you could say, low resistance liquidity, then that's just going to dump all the way down. That's kind of the breaking point for me. And then the other thing as well was we come up, we come down, we then do create this break block as well. That's why being a stop loss. That's why I like going down to the 15 seconds, or not 15 seconds, maybe the 15 and 30 second to then kind of point out my break even point, my stop loss, and then my TP is not 15 seconds, that's just something else. But this for me was my break even point. So we close above, and let me just go for a minute to show my TP point. My TP point was there, and I wanted to take runners up to at least here, but because I was so close to passing my funded account, I just took it to equal highs here, and that would have passed me the account. So that's what I did. It's only a little bit more, and that is still within range of all that resistance liquidity, and you still haven't reached any of these up movement. So if we go to the 1 minute, we then lovely wick straight into that 5 minute. My break even is still the same point. Come up, boom. As soon as that happened, break even, done. Now I'm happy with anything because I'm conserving all my capital, and whatever happens now is where it wants to happen. So we must stop to break even there. And price ultimately took its time here. Pretty sure I went to the 15 second, and because that was hodling and we had this little fair value gap here, if I was going to say to myself, if this respects here, if that respects to go bearish, then I'm gonna manually close. But and then I just boom here my TP, very nice. I'm surprised. I think ultimately took all that low resistance liquidity and ended up hitting the 50. Look at that. Bing 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 bing. So yeah, very good, very nice. This is a short and sweet video. First video. I mean, gives me something to do, and I really enjoy doing this. And if some people can resonate with it, even if they can understand me or not, that's the first thing. Because I'm not even gonna bang on about me, but yeah, I mean, if people just like seeing trading or hearing about trading, but the other thing as well, if you're trading something different, and you're making money with it, then you should not be watching this video whatsoever, because I'm just a distraction to your trading. That's what it is. Yeah, that's the other thing as well. Like, don't get distracted. I mean, we can get so distracted nowadays that you just lose focus. You know, like absolutely lose focus. So don't get distracted. Go for little walks. Clear your head, and then yeah, just trade New York AM basically. That's all the advice I'm giving you. And then just screen time, you know, and then A+ liquidity, but then A+ setup is what you want to be seeing. So yeah, because the other thing as well here is, did I know this was gonna happen? No. This is the most ideal scenario, because if I wanted to go down, I would have respected it here and then just shot down, and then I probably wouldn't have got a trade, or maybe I would have if we had came down again with a 5-minute bearish fair value gap, maybe I would have longed into that, because all then you're doing is just taking liquidity to retrace on. There's just a lot of scenarios that can happen, but you want to be taking a very clean setup with the high time frame narrative, or the ideal scenario, and you just wait for that, which is that for the day. I mean, I didn't take that ideal scenario today because I had that long there, but I'm not gonna lie, that was the sketchiest trade I've taken. So yeah, but if I didn't manually close, I would have got broken even. But yeah, okay, well, 1:25 in the morning now. Validation. Now we'll see if these highs are gonna get taken now, or tomorrow, or Friday. But yeah, I mean, this is a low here that was made outside of a kill zone, so that could get taken again. Didn't go up, but we'll see tomorrow. Yeah, alright, cheerio.